Hey everyone, this is Zero, and today is 19 January 2025, and it's Sunday, and we are doing our weekly analysis, the last week and analysis for the future market. And as you can see, the market is closed, and currently it's around 3 p.m. here. So on Friday, we if you remember, we were here and I was expecting price to either go down or go up. I saw a compression here and GU was showing a divergence while U was doing this compression and a internal bullish move, like for example lower low, lower high, lower low. Wait for a second. Lower low, uh, higher high, lower high, lower low, and then we saw an internal structure here that led to a higher high, higher low, higher high break of the structure. So at that point, you were showing this internal bullish move, whereas GU was showing us a clear bearish move. But that was a manipulation, as I had explained you on that day. And afterwards, I was expecting, but I was also caught in that manipulation, and I thought that the bearish was the real move, and we are getting an entry after this mirror type of candle. But what price did here is was break of a structure and inducement low to give uh, entry to the breakout traders. For example, there will be a lot of traders entering here when they saw this candle closing above this. A lot of people, because we all know that after a compression we will get a big move. So they saw this big candle and they were expecting that price will go up and will not come here very soon, and their all stop losses were here. All the buyers that were correct in direction, but they got manipulated by this. They got out by the manipulation. They must have entered here and their stop losses would be here. Price came down, took them out, inducement low, push out. And for sellers point of view, a lot of sellers would have entered here and their stop losses would have been here. Price took them out and they have converted into buyers, and they would also have got taken out. Or lot of players a lot of players would have seen this break of a structure, then this candle, and then on the M1 we had what I have thought that, because most of the time when you see this mirror types of candle like you have seen here, they form generally at top, or they form where manipulation is has happened. Generally they form at top or bottom or in between where manipulation has happened. So what I saw this and I thought that it is an inducement near a valid supply. That supply led to break of the structure. The structural led to the structural point of break of structure, and this was the last unmitigated zone. And there I saw price doing this build up of liquidity, inducement high, and sorry, for example, and price was compressing here, so I knew that orders are getting loaded. And when I saw this, I thought, oh, all I have to do is wait for a bearish candle that closes below this. And when I saw candle going this, if you remember that stream, if you remember that video, you can go and check out in that video in my channel. But there was a mistake. I didn't change the chart. I actually did it. I didn't change the chart, and I didn't open the broker's screen. That was my mistake. Although that day was great day. And what happened? Let me explain it for you. So what was happening? That candle was like, take this that as a bearish candle. So what I saw there was, on more than 30-second candle was like had already crossed this much area, and then it went outside here, and I thought that wait, candle was started forming from here, and it had already went this much here, and in the last around for 50-second candle was dancing here, and in last 10-second candle reversed, showing that it is a sign of inducement low. Price captured the liquidity, took all the recent sellers that had entered, seeing this impulsive reaction, took them out, took all the breakout traders, introduced new breakout sell trades and took them out. So a lot of liquidity was introduced and captured at this point of view point. And of course I had entered with a stop loss, because but there was my mistake, two mistakes. First of all, this reaction was not of a valid supply area, but we often see that price just more often than not, that price just doesn't reach to the zone and just gives us an early reaction and then fails that zone, and that was what happened here. And sometimes price do give us early reaction, but that reaction is valid, and you can miss a lot of move, a lot of big move. And I was already up that up for that day, because my last trade went well, so I thought that I can take a risk, but I didn't risk my 100% account. I risk around 50% account. So what happened here, let me show you. So I entered here with 5 lots and my stop loss around here, and when I saw that price reversed, and I instantly knew that this was an inducement low, so I exited my position at around here and entered my buy. And this candle, what you are seeing here, was an instant impulse, so I got entry around here, and my stop loss was around here. If that price reverses, we would exit. And from here around here, 6 or 7 pips, I took out my 50%, more than 50%, around 3 lots. I exited with 3 lots, and my rest of the 2 lots went for this 22 pips, and which made me around more than 40,000. The this much of move made recovered my loss that I made here. and the rest to lot gave me extra profit to seize up on. And what happened after that trade? Let me explain it for you. We saw price tapping into a valid zone and not failing that zone, respecting it. As you can see, the high of that zone is here, and I'm sorry, and price actually took captured liquidity here. You can see price captured liquidity here, and it went for the break of structure, and it was an internal break of structure for higher time frame, but it led to the break of major break of structure for lower time frame. So that was a valid area. Definitely it was. That is why I had marked it out already. And what we see that price later comes here is all these zones. When you see multiple zones around 1 to 2 pips, 1 to 2 pips, 1 to 2 pips, multiple valid zones, and price giving you a high momentum towards the direction opposite to that of a zone, you can expect that all of the zones that are just 1 to 2, 1 to 2 pips apart, they all will fail because these are nothing but, I know that they are valid, but you cannot have multiple valid zones in a same price range. Like for example, 12 pips. In this 12 pips, we have around 3 valid entry points, and all of them were a form of liquidity pool because a lot of sellers will enter seeing these valid pools. So when you see a lot of zones coming together in an area like this, never ever enter on limit type of trades, or you will see something like this: enter after entry confirmations. But if you have, like for example here, I cannot put limit here because price can fail and give you reaction from here, or price can either fail both of these zones and induce both of them and then give us a real move. So always wait for confirmation. So what we see there, the price taps into that area, falls back and tries to cover it but fails to cover that and induces it and gives us a valid and a heavy bearish move. But if I had to enter sell, for example, if I don't have taken this as you can see, this 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 move, if I haven't taken it, and if I had to take a sell, when would I have entered? I would have entered around here, and price had filled this wick, and it had confirmed me that it's a break of a structure, then I can enter afterwards at any point, or I would wait for price to come back to this point. But as we can see, price went out and never came back. And you can see here that price is respecting this demand, but what I think is this demand will fail. Why is that? But I can be wrong. I'm not saying that this will happen. I think that this could be the case because all I see is heavy bearish power till this zone, And this zone has provided some little bit of resistance, and as the market opens, we will see what is going to happen. Now, for my weekly analysis, I had to first check my GU out, and then we will mark our valid supply zones and liquidity points. Here comes the GU, and you can see GU is also getting a resistance. Valid supply area. Is where you can see that we are full. This is this tells me that this zone is strong, but that also means that the zone is more likely to fail because there is a liquidity. Price hasn't tapped there yet, but we can see a form of resistance. We can see there is a void here, so that is a form of liquidity pool. You can see. Mm, but, Break of the structure. That's what I can see in G currently. And for E, if the word is four. Yeah, PM, And that's pretty much it. And that's how I do my pre-market analysis for the next week. But I always like to check where price has reached. Either on 2 hours or sometimes on 4 hours to see the structural points, how price is moving. Mm, This is where I took that position that recovered me from my loss. I just captured the price moved around 157 pips, but I had captured 150 pips there, and I'm happy with it. Yes, I cleared lower, low, and just close below. There's a lot of salesmen. Sorry, the price closed below this line. A lot of sellers will enter, but what we can see that price has broken the low, which made the high. That shows us the bearish powers, and we can see price breaks this, then we can expect a reaction from somewhere in this region. This is period. October to September slow. November to October. Let's see. If January closes below this, we can expect a reaction from here. If price to go much more lower, price will exit this area. But we can see as for now that price has taken only one, yes, liquidity reached here. Which price generally do more than much. We can expect price to go below 300 to 600 pips per month. So generally we have already crossed 400 pips. Taking 600 on an average, still price would need two consecutive months like 600 or four consecutive months to reach there. Four consecutive months we can expect if the bearish momentum is correct, then price would reach here in around 4 months. If price reaches here around in 4 months, first of all, what could be the plan for us in that particular stage? We should maximize our profit system. Maximize. We should maximize our profits in between these next 4 months. We will be 1, 2, 3, July till July. We should make more money in sales than on the buy side. But that is for the higher time frame. And if we see on lower time frames, we will get bullish days, we will get bearish days, we will get bearish days, we will get bullish days. So it is not for our concern that when price will reach this demand area, because as for the upcoming week, what we need to know is that these are the valid areas where price could pull back. These are the liquidities that price can target, and these are the supply areas where price can give us a retracement. Still cannot know what and, and where price would react on, because it like that. So that is the weekly analysis for this week, for the upcoming week, and let's see how the next week goes. So that will wait for today. Bye bye.